Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Jodie Gunzberg, Managing Director at CoinDesk, to discuss why recent crypto losses are not as bad as you may think. And Jodie, I mean, clearly crypto is not immune to the market volatility that we've seen since the beginning of the year for a number of reasons. But what's your view on the recent crypto market drop?
To put it into perspective, even after this recent drop, the historical returns of Bitcoin in the last few years are huge as compared with the traditional assets. And although the decline was about 40%, that was more than double the equities, it's not that bad considering that the volatility of Bitcoin is 5 times that of the S&P. And when you look at Bitcoin to its own history, the drawdowns today are nothing compared with what they were in 2018.
So why do you think it's different than it was in 2018?
In 2018, Bitcoin's drop was mainly crypto-driven. And today, it's mainly macro-driven. That's driving down all of the asset classes. And despite the Fed's effort to try to moderate the narrative, there's still a very bearish sentiment with accelerating inflation, tightening policy, and decelerating growth. That said, there's more awareness of crypto in the market, which is also leading to greater headline risk for institutions. But despite that, we still have better infrastructure, deeper derivatives, more liquidity, and more institutional investors.
So would you say that the crypto market is maturing then, and that potentially we'll start to see less volatility? Because in 2018 it decreased. Now it's decreasing now. Perhaps as it matures, it'll see less volatility than it sees now.
Yeah, I still think crypto markets are in its infancy. However, it has matured since 2018, and we can see that from the increased institutional adoption, more products coming to market, and the stability in the volatility. The volatility of Bitcoin through this drop only hit about 80%, which is just a little bit above its average of 67%, and it's far less than its peak volatility that happened in 2018. And compared with equities volatility now is the highest since the pandemic crash, and it's about double its historical average. So there's still demand and more product coming to market despite this drop. And while many of the protocols are doing different things and are smaller than Bitcoin and ETH, there's still enough liquidity in Bitcoin and ETH to support the institutional allocations.
So if we look outside of Bitcoin and ETH, how did the other coins perform?
Most of the other coins lost a lot more than Bitcoin and ETH. And not only that, the correlations between all of the digital assets spiked. And this is so much from the risk-off environment. For example, the assets in the metaverse used to only have correlation of about 0.4 to the rest of the digital assets, but now that's spiked to 0.9, which is really high. So even with this high risk, more and more of these assets are getting developed. Culture and entertainment has surpassed computing to become the 4th biggest sector, just behind DeFi. So I think people are still loving this application of the blockchain anyway.
All right, Jodie, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.